Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, August 5th, 5:24 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Special shout out to Ted for covering for me on Friday's video and the podcast, and also he did Thursday's video and the Sunday video. So four in a row for Ted. He really stepped up over the last couple of days while Connor was out of town and I was just sick. And I'm back in the saddle here. Let's get right into it. Market state, not surprising, in a correction. Check the trend gauge over here. One more piece of bad news here. All five of the major indexes now well below their 50-day moving average. So officially, as of 8/5, our medium-term trend goes into a downtrend, joining the short-term 21-day moving average and market leadership, which we flagged as downtrend slash bearish on 7/19. And there hasn't been a lot for bulls, especially growth stock bulls, to cheer about since that day. Long term, it's key. All five of the major indexes are still above their 200-day moving average. We try not to throw the baby out with the bathwater. I mean, we're out of individual names. We do want to maintain, and history has just taught us this: no serious correction, no bear market, no terrible broad index deterioration can occur as long as you stay above the 200-day moving average on the major indexes. And that's where we find ourselves right now. Brutal 3-day pullback. Are we ready for a bounce? There's a lot going on geopolitically and economically, and we'll get through it as we go through the video. No predictions ever, but things aren't looking too good for the bulls right now. So what happened? As I said, third straight ugly down day. Is it bounce time? We are oversold. You can see how harsh the correction has been for the prior 3 days. This is how things happen, little by little, and then all at once. I mean, it seemed like maybe it was nothing back on 7/19 when we noticed leaders were not acting well, put them with the red arrow, and then it was the 21 day, and then the slope of the 21 day rolled over, and then a couple of indexes broke the 50-day. Now we're flat to rolling over on the 50-day, and we're battling down around the 100 and 150-day moving averages as we struggle to hold on to this long-term uptrend. Here are the final numbers on the day. We'll get through the news into why we're as red as we are as we progress through this. No 21 over 21. There are, frankly, just aren't 21 leading stocks right now. I could come up with a list of 21, but are we really going to be buying staples as market leadership names? Because they're not, and that's not what we do here at Revere. That's not what we don't buy staples for their paltry dividend and their safety. We want to buy growth stocks when the market is in our favor, and we're more than content to hang out in the S&P 500. We were in some other indexes, but those deteriorated. So we're happy to hang out with a small piece of the S&P 500 while the market figures out what it wants to do. The big eight, terrible, down 4%. The RG8, also bad, down 2.6%. S&P 500 was down near 5% at one point overnight, opened down 4.1%, put in the low within the first 5 minutes, rallied in the morning, struggled in the afternoon, closed down 3%, equal weight also down about 3%. NASDAQ 100 opened down 5.3%, closed down 3%, equal weight down 2.1. The Dow down 2.6, mid caps down 2.7, Russell 2000 opened down 5.5%, closed that to only being down 3.3%. Global diversified 60/40 stock and bond down 1.6%. Our flagship GROTECTION portfolio down 1.53%. Let's get into the ugliness, and we'll start here with the S&P 500. Very clear. Big negative reversal, and it just seems like last Wednesday, the NASDAQ 100 was kind of nice bounce. Back above the 21-day moving average. This was the day of the FOMC. There was some weakness into the close. There were some ominous signs, namely the big failed breakout on small caps as Powell spoke into the close, and that followed through to the downside. We had showed some strength initially Thursday morning, and then things just completely came apart. This is what I mean by little, which is the weakness, weak bounces little by little, and then all at once. The all at once was Thursday, and then that was a clue to start lightening up the big negative reversal, as if we didn't have enough insight from the weakness of leading stocks back here on the 16th. But then gap down on Friday, another gap down this morning, closed about mid-range, trying to put in a low. This pink line here is the 150-day moving average. We held the 100-day on Friday, gapped below it, didn't even touch it today, but did undercut and reclaim the 150-day moving average. So we're looking for small little wins here. Wins, WINS, not WINDS, which we're having enough of right here in Northeast Florida right now from this tropical storm that's coming through. But we're looking for some stabilization. We're looking for some clarification on some geopolitical events and economic events in Japan. And really want to see the market stop going down. There are absolutely relatively very few leadership quality stocks. You don't attempt to pick a needle in a haystack. You want the market firmly with providing a tailwind when you go heavy in the market, and we're nowhere near that right now. So there's the S&P 500. Let's look at the NASDAQ 100. Similar to the way the S&P undercut and reclaimed the 150-day, we did that on the NASDAQ 100 at the 200-day today. So after holding the 150-day on Friday, same thing in reverse. We're just one level off. We bounced at the 100-day on Friday on the S&P. We bounced at the 150-day on the NASDAQ, which has very clearly been the weakest index over the last 3.5 weeks. But the undercut and reclaim at least puts a line in the sand here, right around the 200-day moving average. You can see we are up after hours, but the way the VIX is and the way volatility is expanding and the daily ranges are expanding, this is not something you can trust. That can be gone in 30 minutes. And we know when the market turns into a casino and not an investable, reliable mechanism. It's just not that right now. We had the 21-day coming through the 50-day moving average on the NASDAQ 100. This is going to happen on the S&P 500 tomorrow also, but not a lot of good to see here. You can see the massive red or pink bars of volume showing distribution. Not what we're looking for when we're looking to get to build our capital. Dow Jones Industrial Average broke the 21, broke the 50, broke the 150. Between the 150 and the 200 right now, the 200-day up to the 38,000 level. So this 40,000 breakout, my voice may not hold out throughout this video, so I'm going to have to chill. Excuse me. All right, so we failed at 40,000, obviously. Excuse me. I will get through this. But there's the Dow with some relative strength. Mid caps, the S&P 400. I think I said Wednesday partway through the video. I think I'm getting a cold, boy. Did I ended up testing positive for COVID, and that was an ugly 3 days. But here we are. All right. 3 ugly candles there on the mid cap index. Russell 2000, 3 ugly candles there as well. Did bounce at the 200-day moving average. Equal weight RSP, equal weighted S&P 500. Below the 150-day moving average. Let me just make sure that that's the 150 and not the 100 that I have on here. Yes, it is the 150. So that coming apart as well. The VIX. I don't think I've ever seen this before. Up 65%. Um, read some research that when VIX has a massive spike like this, it's usually, as if you don't get another spike, 4 to 7 days, um, is when you look for a bottom in the S&P, and that ironically also corresponds to William O'Neill's 4 to 7 day follow through, but there are no setups right now. Let's go to the dollar. Dollar usually a safe haven, but with what's going on with the yen carry trade, basically Japan has had their rates at zero for forever, and people have been borrowing in yen and investing in other instruments, and now Japan is starting to raise their rates, and people are starting to panic and unwind that trade. It's called unwinding the carry trade, and it's causing currency volatility. It's also causing huge bond volatility, and the Nikkei was down 13% last night. We need to see that stabilize big time before we can get some confidence back in the market. All right, on to precious metals. Gold undercut reclaimed the 21-day moving average. GDX under the 50-day moving average. SLV at the 150-day moving average. Bitcoin turns out is not a store of value. Down 14%, was down much more than that. Did bounce at least and end up in the top third of the range, but busting below the bottom of this flat base. On to bonds now, the broad bond index. Looked like, well, at least we had a negative reversal here. So I thought I was going to be fine with this, but I don't think I've talked this much in days. So negative reversal on the broad bond index. Hopefully that puts in a top in prices, and money has been panic flowing into bonds. TLT, the long bond, up at the top of this big cup. Let's go to the yields. Longer term yields falling down near this 4% is where we found support from back December, January. We'll see how that continues. Let's get to the tail of the tape. I'm going to hit the highlights, and unfortunately going to have to wrap this up. All right. Carry trade, we talked about that. North Korea was mobilizing a bunch of forces on the border with South Korea, and the Kospi, South Korea index, sold off near double digits as well. In addition to that, you've got Iran saying there's an imminent attack on Israel. You've got the markets considering a Fed policy mistake, and you've got the VIX inverted, which is a sign of extreme volatility and risk in the market. Keys, we are above the 200-day moving average on the S&P and the 150-day, above the 200 on the Qs. Those are keys that we have to watch going forward. These levels are broad, and there's a lot of play in between them when volatility picks up. Third day down, obviously. All 11 spider sectors negative. The Apple buy that we did on Friday obviously did not work out with Buffett selling half of his position. We took a loss on that, and also trimmed some index exposure. So we're down to 0.3 beta. That's basically 30% exposure to the S&P 500 and 70% cash and T-bills. What we're looking for tomorrow is some stabilization with the news items and the indexes. And where's the S&P and the NASDAQ 100 going to be relative to the 100, 150, and 200-day moving averages? Bottom line on the day, third straight ugly down day. Is it bounce time? We'll have to let the market decide that, but we'll see what the action is overnight, and we'll go from there tomorrow. And that's going to wrap it. As always, like to hear from you. You know the spiel, you know my email, you know our phone number, you know how to reach out, but I'm going to have to wrap this up for Monday, August 5th. It's Don Vandenbord with Revere Asset Management, telling it like it is. Our flagship portfolio is GROTECTION, and you know why. This is protection time. Thanks for listening and have a great day.